most people agree that Warren Buffett is the greatest investor of all time. Buffett has produced a 20.5% annualized return for his fellow shareholders during the course of the 54 years that he has been in charge of Berkshire Hathaway. Despite these facts, the renowned millionaire is most known for his capacity to condense complex financial concepts into catchy soundbites, and Uncle Warren's common sense counsel is still relevant today. In this video, we demonstrate how Buffett's simple investment advice may be used to inform the daily financial decisions made by doctors. Here are Warren Buffett's top 5 rules to live by. Before starting, click on like and subscribe button to get notification of more interesting and life-changing videos. Rule number 1. Never lose money. It is common knowledge that Buffett himself has lost billions of dollars on multiple occasions throughout the course of his career, including a loss of $23 billion during the financial crisis that occurred in 2008. How is it possible for anyone to adhere to Buffett's golden rule if this is the case? This first principle is not intended to imply that it is impossible to ever lose money. Rather, its objective is to emphasize the importance of putting the preservation of capital ahead of all other priorities in the process of allocating funds. Do not be frivolous by failing to do your homework, do not gamble, and above all else, never go into financial decisions thinking that it is acceptable to lose money. This is what Buffett is simply referring to when he makes this statement. When making decisions that could have an impact on your wealth or the health of your practice, you should give the utmost importance to the preservation of your capital. For instance, whether you are evaluating the possibility of making investments for your personal finances or your practice's ancillary operations, you should be very cautious about making any investments that have a large initial cost or related fees and an uncertain return on investment. In a similar vein, in order to maintain a healthy lifestyle as a physician, this requires you to control your spending habits. It is reported that Warren Buffett once made the famous statement that Wall Street is the only place that individuals ride to in a Rolls-Royce to obtain advice from those who take the subway. Buffett still resides in a humble property that is worth 0.001% of his wealth. Be conscious of the things that you and your family do and do not require. Whatever is left over after that should be put into savings and investments, since the preservation of one's money will always be the single most important factor. Knowing when to cut your losses and walk away from a losing situation is just as crucial to the process of creating wealth as is the ability to preserve capital. Too frequently, medical professionals get caught in the trap of doubling down on risky investments that just don't turn out the way they had hoped. Do not continue to throw good money after bad if the investment continues to lose money. This applies whether the money is being lost due to a poor choice of stocks or an ancillary service line for your practice that continues to bring in money. Rule number 2. Never invest in businesses you can't understand. Buffett famously stated, "Risk comes from not knowing what you're doing," and the quote has stuck with me. If you're a doctor, you should find this rule to have a lot of common sense. Whenever you are deciding where to invest your money, whether it be in a stock, a partnership investment, or any other type of equity offering, you should always choose transparent investment options that you are able to comprehend completely and explain easily. Rule number 3. If you don't feel comfortable owning a stock for 10 years, you shouldn't own it for 10 minutes. At the annual investor conference held by Berkshire Hathaway, Buffett is credited with making the famous statements. Our ideal holding period is forever, and the stock market is manic depressive. To begin, the acquisition and maintenance of investment holdings do not result in the occurrence of taxable events. This enables the investor to reap the benefits of compounding considerably more efficiently. Second, as Buffett does, you can more successfully block out the day-to-day noise that is generated by the financial news industry. If you approach each investment as a long-term partnership, this is something that Buffett does. Rule number 4. It is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. You will immediately understand the validity of this Buffett proverb if you have a long-term time horizon for your personal investing. When Buffett initially made this claim, he was making reference to value investing teachings he had learned from his well-known mentor, Benjamin Graham. The proverb is accurate because eventually valuation catches up. Companies with fair prospects but spectacular valuations will turn into awful investments. In contrast, a great business that is appropriately valued will be a great investment for years to come. In other words, over the long run, assets with inherent advantages, or moats, will always outperform. This idea applies to any significant investment choice that millennial doctors make in their lives, not simply stock purchases. When buying a house, for instance, seek for a property that has a long-term benefit like being in a decent region or a rapidly developing portion of town. The job with the best long-term prospects for your career and personal happiness should be chosen over one that is just the highest starting compensation when determining where to invest your time and abilities. Rule number 5. It takes 20 years to build a reputation and 5 minutes to ruin it. Even though Buffett works in finance, his reputational counsel applies to all doctors. Uncle Warren once told his staff, "I will understand if the company loses money. I'll be harsh if the company loses even the slightest bit of repute." Your brand as a doctor is in many respects defined by your reputation. This idea can be implemented for millennial doctors by always being aware of the potential effects of your choices, both financial and non-financial. A physician's reputation will be crucial to how his or her career develops, just as a company's brand is essential to its success. Like Buffett, cultivate it and safeguard it. Despite being on an entirely different path in life, doctors can benefit greatly from the advice of the greatest investor of all time by applying it to many of the choices we make every day. This is it for today's video. What do you think of our video? Tell us in the comment section below. Don't forget to like and subscribe our channel. Thanks for watching.